Netflix has seen massive gains this year, up 86%, outperforming the S&P, far outperforming the S&P 500. Our next guest just boosted his price target on the stock to $1,000, saying that there are several reasons the streamers can continue to outperform the S&P into 2025, but there is some caution ahead. He's still cautious that Netflix could be approaching a valuation danger zone. Let's start there. We want to bring in Justin Patterson. He is a managing director at KeyBank. And Justin, you talk about a valuation danger zone. What do investors need to know?
Yeah, great. Thanks for having me. So if you look at Netflix's valuation right now on an EV to sales basis, it's right around 9 times forward sales. And historically speaking, that's a top for the stock. But we step back and dive a little bit deeper here. This is a business that's showing a free cash flow inflection, which it didn't have in the past. And it's now shifting toward more of a monetization story in there. So as you see content like Squid Game 2, the NFL that just recently happened, WWE, which kicks off January 6th, and then Stranger Things 2 or Stranger Things Season 5, hitting this coming year, that's going to drive more time spent on the platform and support price increases over time. So when we see that and then flip over to an earnings multiple, the stock's trading in 2026 at a high 20s multiple. That looks pretty reasonable to us for a stock that should be growing north of 20% on earnings for the next few years.
How did the live event that was the Christmas Day double game special play into your call, Justin, if at all? Did that make you more bullish on the stock?
You know, we've been expecting a big number from that, just from the Jake Paul, Mike Tyson fight previously. Looked in line with expectations. What I'm more interested about on the go-forward basis is just the NFL setting up more live events in the future. So we've already had an announcement on Women's World Cup coming to Netflix over the next few years. I think as you go through the course of 2025, there should be more live event announcements from Netflix. And as you get more of these big events that draw a lot of eyeballs, that's good for new subs growing, and it's good for advertisers coming on the platform. And that really gives you more confidence in the 2026 and beyond story here. The interesting thing about Netflix so far, a lot of this growth in 2025 or 2024 and into the start of 2025 is more sub-based, so more members joining the site. We still haven't really had that monetization inflection yet, either from pricing or advertising getting bigger. So as we see that play out over the course of 25 and into 2026, that makes Netflix one of the few stocks in our coverage universe that could actually have revenue re-accelerating to exit 25. So that makes for a pretty compelling growth profile here.
You know, just I'm curious, when you talk about streamers and you talk about the space in general, there's been so much focus on consolidation and what that looks like. We know Netflix has very much brushed off any rumors or any consideration. You just had Ted Sarandos speaking at the UBS media conference earlier this month, reiterating that the company doesn't have any plans to pursue M&A. Is that the right strategy, do you think, for Netflix? Or should this be something that the company does pursue in order to maintain that dominance?
You know, historically speaking, Netflix not acquiring other companies has worked out quite well for the business over, this year or even longer time periods. It's been a very, very attractive investment to go back into the core business, invest in content, as opposed to acquiring other businesses and taking on M&A risk. So I don't think anything necessarily changes there into 2025 and beyond. I think the ability to just go out, license unique sets of content, or be opportunistic on some of these live events like the NFL, like World Cup, provides enough of a lift to the core business here.
And you lay out such great points in the note about how Netflix has already won, and you think this time is different in terms of more room for upside off the back of that win. But what names in the streaming space do you think could potentially disrupt that win for Netflix? Who else should investors be looking at?
You know, I only cover internet media stocks in there, so I'll defer the traditional media to some of my peers, like Brandon Nispel at KeyBank. I think the only other place I would recommend looking at would be just adjacent to Netflix on the audio side. Spotify's been one of our top picks for the past 2 years now. Still has a lot of runway in terms of gaining more music listeners around the world. You're starting to see pricing become more of a driver for the business. And similar to Netflix, there's now a lot more partnerships on advertising to make that a bigger piece of the story into 2025 and beyond.